What if I told you that one Midwest market has delivered nearly 137% home price appreciation since 2005? Today, we're diving deep into the Sioux Falls, South Dakota real estate market using the official Federal Housing Finance Agency data that tells a fascinating story of resilience, explosive growth, and what might be coming next. I've analyzed 20 years of market data to give you 5 critical insights that every investor, homeowner, and real estate professional needs to understand about this often overlooked market. Let's start with the headline number: 136.8% cumulative appreciation since 2005. To put this in perspective, if you bought a $200,000 house in Sioux Falls in 2005, it would be worth approximately $474,000 today, based on appreciation alone. This performance significantly outpaces the market's own historical average of 4.4% annual appreciation. What makes this even more remarkable is that this includes the 2008 housing crisis period. The Sioux Falls market has proven to be a consistent wealth-building vehicle over the long term, demonstrating the power of demographic growth, economic stability, and geographic advantages in the upper Midwest. Here's where Sioux Falls really stands out from national trends. During the 2008 to 2011 housing crisis, while many markets saw devastating declines lasting years, Sioux Falls experienced relatively modest negative appreciation, bottoming out around negative 1.3%. More importantly, the recovery was swift and decisive. Starting in 2012, we see consistent positive appreciation that built momentum year after year. This resilience tells us something crucial about the underlying economic fundamentals of the Sioux Falls market: diverse employment base, reasonable cost of living, and steady population growth created a foundation that could weather national economic storms. Now let's talk about 2020 to 2022, a period that will likely be studied by real estate economists for decades. The data shows 18.4% appreciation in 2021. That's more than 4 times the historical national average in a single year. This wasn't just a one-year anomaly. 2022 delivered another 11.5% appreciation, creating a 2-year period where home values increased by roughly 32%. This surge was driven by the perfect storm of record low interest rates, urban flight patterns, increased remote work, flexibility, and Sioux Falls' reputation as an affordable, business-friendly market with quality of life advantages. Every market cycle has its correction phase, and Sioux Falls is no exception. After the historic highs, we're seeing a dramatic cooling. 2023 brought appreciation down to 2.4%, followed by just 0.5% in 2024. The most telling data point is the recent quarterly performance. Quarter 1 2025 showed a negative 0.56 appreciation. This isn't necessarily alarming, it's just a natural market response after such an extraordinary run-up. Markets need time to digest gains and establish new equilibrium pricing. This brings us to the most important insight for current market participants. The recent quarterly data shows a pattern of volatility: negative 0.56% in quarter 1, positive 1.1% in quarter 2, suggesting the market is searching for direction. We are likely witnessing a transition from the pandemic area growth phase to a new normal. The question isn't whether Sioux Falls will continue to appreciate long term. The 20-year track record suggests it will. The question is what the new baseline appreciation rate will be and for how long this adjustment period will last. For investors and homeowners, this data tells the story of a market that has consistently delivered above average returns while showing remarkable resilience during economic downturns. The current cooling period may actually represent opportunity for those with longer term investment horizons. The Sioux Falls market demonstrates that sometimes the powerful real estate investments aren't in the flashiest coastal cities, but in stable, growing Midwest markets with strong economic fundamentals. What do you think about these trends? Are you seeing similar patterns in your market? Drop a comment below with your thoughts. And if you found this analysis valuable, subscribe for more data-driven real estate insights. Remember, successful real estate investing isn't about timing the market perfectly. It's about understanding market cycles and positioning yourself accordingly. Craig Bertrand, BHHS, Midwest Realty, coming to you.